What is going on here again? Pre-market. The stocks are already significantly lower. It looks like we will see huge outflows in the crypto markets and stock markets again today. Jim Cramer also announced that stock markets could crash another 20% from here. While we've already woken up to this, it's supposed to go even lower, damn it. How much lower? And here you should be very clear. Don't let yourself be unsettled now. You will probably read on Twitter every day now, it's going down another 30% and another 25% and so on. It's all the same as every time. Again, don't let yourself be fooled. Zoom out. When you zoom out, it's not all that negative here. In the short term, we are definitely experiencing pain, but we also see in the stock markets that this short-term pain could slowly be coming to an end. Because, if we had already made our minus 30% with the big stocks, often in the past we had after that seen a nice further breakout. One simply has to understand what is currently happening. Due to all these tariffs, we are now entering a US recession. The US recession has currently increased, which, to be honest, is not so cool. But we are currently pricing that in. And even if the recession should come, we will not be surprised by it anymore. Then the markets will not react much more drastically. No, the markets would be able to handle it because we are already pricing it in now. And that is what you need to understand. The markets try to think 6 months ahead. That means even if we see a recession, we have probably already seen the worst in the stock and crypto markets, and it will remain that way. Nothing will change that. Even if it is announced that the recession is now here or whatever, that may be the case, but we will not go much deeper. During the COVID crash, we also had a recession, briefly cancelled. But afterwards, we had a monster rally in the stock market, and the same in the crypto markets. In the long term, nothing changes. Only that we are currently slowly pricing in the recession, which is not a big deal. We are currently at 4 on the Fear and Greed Index. This is exactly the time when one should accumulate, not fall into fear. In the long term, this is currently a good time. What we are seeing today is probably a typical Black Monday. We've had similar situations in the past. It could be the last sell-off. Because people like JP Morgan are already announcing that the Fed might lower interest rates, even before the next rate decision. That's what Trump wants as well. He wants the Fed to be slowly but surely forced to lower interest rates. And that's slowly happening. Meanwhile, the chances are increasing that we will see 5 rate cuts this year. For the past few months, we've been talking about 2 the whole time. Now we're already pricing in 5. Zoom out, damn it. This is not short term. Cool. If I'm completely honest with you, but in the long term, they are following a strict plan here. And that is the plan to refinance $9.2 trillion. They have to do that. And that's why Trump wants to lower the interest rates on government bonds. He can only achieve this if people exit the stock markets and invest in government bonds. Then the interest rates there will be lowered. He's achieving this now with tariffs and so on. He creates uncertainty so that people buy government bonds. He has already partially succeeded. The interest rates on government bonds have already dropped by 0.5%, which over a decade amounts to $500 billion that the USA saves with this. And now you just see this ratio, too. How much money is really involved here? Trump is doing this deliberately so that they can refinance these $9 trillion this year at a better interest rate. If you look at it over the months, we will soon see a loose monetary policy. In the USA, further interest rate cuts, and Trump will likely announce tax cuts this year as well. That would also bring us fresh money again. And as it looks, more and more negotiations are coming. Yesterday, the news already came that over 50 countries are now ready to negotiate with Trump to talk about the tariffs. And I already pointed this out to you recently. It is impossible for these tariffs to be maintained over months. That's just not possible. The tariffs are way too high. No one in Europe will pay 4,000 euros for an iPhone. In 2 to 3 months, most of the tariffs will probably no longer be in place because in the long run, it's simply not feasible to maintain these tariffs. At this point, I can tell you again, don't pay attention to what they're talking about. Companies like BlackRock have continued to significantly increase their Ethereum positions in the last few weeks. Bitcoin addresses with over 1,000 Bitcoins are currently continuing to buy. They are not selling, no, they are continuing to buy. Bitcoin addresses with over 100 Bitcoins, exactly the same. They are buying at these market times because they know very well that we are currently very undervalued here. Look at the smart money, at the big whales, the people who really have money here. They are acting correctly here. They are not panicking. No, they continue to stock up as they should. And I would like to say at this point, in the crypto market and the stock market, it can certainly go deeper again. But I mean, we have already seen over a 20% correction in the S&P 500. Back then, during the COVID crash, we had, for example, a maximum crash of 35%, which is already severe. Think 35%. We wouldn't see that currently, but it is quite possible that we might fall a bit further in the entire stock market and perhaps also in the crypto market. But I would say most of the downward potential has already been exhausted. We will not crash twice as hard again. That's simply not feasible. Over the years, we have always recovered anew each time. You have to zoom out. You have to look at the big picture. Don't panic. It might go a bit lower. But in the coming months, we will see a nice rally again. According to almost every indicator, we have not yet seen a bull run top here. A lot still needs to happen before we can talk about a bull run cycle top here. So far in this cycle, we have not been in that overheated area where one could speak of a Bitcoin top. Accordingly, good months are still ahead. Based on time and data, we should see our Bitcoin top by the end of the year. If we can trust time and data. In the past, we were able to do so every time. It remains exciting to see if it will be the same this time. The indicator suggests sell your house and buy altcoins. That's how low we are on this indicator. You have to imagine that. I think in the long term, this is currently a historically very, very good time for some good altcoins. Otherwise, it's also a good time to increase your Bitcoin holdings. Because even with Bitcoin, I think we can easily see price targets of $150,000 and more in this cycle. I am and remain optimistic. This cycle is likely to unfold just like the 2017 cycle. Simply because we also had Donald Trump as president in 2017. Because there, in 2017, we also gradually built up step by step. At the end of the year, it became really interesting. This cycle is definitely not running at all like the last cycle, more like the 2017 cycle. As I said, we also had Trump as president in 2017. That's why I also align my timing and data with the 2017 cycle. Accordingly, it should really take off again at the end of the year, becoming really interesting. If we also look at the macro data with interest rate policy, with a loose monetary policy, 4 or 5 interest rate cuts this year, then we should really see a nice rally here at the end of the year. And with Bitcoin, but also with stocks, because macro technically we are crashing in the short term, but in the long term, everything is still very, very good, especially with the monetary policy. That's why I'm accumulating again bit by bit some cryptos, altcoins, but also stocks. And I think that's the right approach, not to fall into fear, historically speaking. When we are so oversold, is it always a good time to buy? Thank you for watching and see you next time, friends.